Welcome back to the deep dive. Today, we're going to be taking a close look at Li Lu's speech, Global Value Investing in Our Era, which he gave at Peking University just a couple of months ago in December 2024.
Yeah, this speech really packs a punch in terms of insights. I mean, Lilu is a pretty big deal in the world of investing, especially in value investing.
Totally. He's got that connection to Warren Buffett, and he's been managing Himalaya Capital for, what is it, almost 30 years now?
Something like that, yeah.
Yeah.
He's seen a lot of economic cycles
Mhm.
and really understands the global landscape. So when he talks about challenges and opportunities, people listen.
For sure. And in this speech, he doesn't hold back. He dives right into the big issues facing the world today. Things like the middle income trap and the changing dynamics of international relations. And of course, he ties all this back to how smart investors can thrive in these uncertain times.
Right, because it's not all doom and gloom. There's opportunity amidst all this change. And that's really what Lilu tries to highlight.
Okay, so let's start by unpacking his assessment of the current economic climate, particularly in China. He paints a somewhat concerning picture, wouldn't you say?
He does. He's not sugarcoating anything. He points out that China is facing some pretty strong headwinds right now, starting with a 20% youth unemployment rate.
20%. Wow, that's a really startling number. What's driving that? And what does it mean for the overall economy?
Well, it's a combination of factors. The pandemic certainly played a role, disrupting global supply chains and slowing down economic activity.
Right, that makes sense.
But on top of that, there's declining confidence in the private sector, which is a big concern.
Declining confidence. Why is that happening?
It's complex, but Li Lu suggests it has to do with China's reliance on exports and the shifting role of the U.S. in the global economy.
So, if the U.S. starts changing its trade policies or becomes less engaged in, say, maintaining global stability, that could have a ripple effect on economies like China's.
Exactly. It's like China's economic engine is partly fueled by global demand. And if that demand starts to weaken or becomes unpredictable, the engine sputters.
Makes sense. So this economic uncertainty is contributing to a feeling of what Li Lu calls involution in China, this sense of being stuck in a rut.
Yeah, it's like you're putting in all this effort working harder and harder, but you're not really getting anywhere, like running on a treadmill. You're moving, but you're not making progress.
It's almost like a collective feeling of being trapped despite all the progress China has made over the past few decades.
Precisely. And here's the thing. Li Lu argues that this isn't a uniquely Chinese problem. These are universal challenges that many countries face as they transition to becoming modern, advanced economies. He actually uses a framework of 3 stages of civilization to illustrate this point.
3 stages of civilization. Okay, tell me more about that.
He talks about Civilization 1.0, which was the hunter-gatherer era, then Civilization 2.0, which was the agricultural era, and now we're in Civilization 3.0, the
Yeah.
modern science and technology-driven era.
Okay, I'm following so far. Where does China fit into this?
Li Lu says China is in a transitional phase, what he calls the 2.5 stage, where the economy has grown rapidly, but other areas like social governance and political systems haven't quite kept pace.
It's like a mismatch between economic progress and the evolution of other aspects of society. Right?
Exactly. And he actually points to countries like Japan, Germany, even the U.S. They all experienced similar growing pains during their periods of rapid industrialization. They had to overcome challenges, adapt to new realities. It wasn't always smooth sailing.
So, what can China learn from these historical parallels? Is he suggesting that there's a danger of getting stuck in this 2.5 stage?
That's a key part of his message. He believes that understanding these historical patterns is crucial for China to avoid falling into what's called the middle income trap.
Ah, yes, the middle income trap. We hear that term a lot these days. It's basically a warning that economic growth isn't always linear, and there are potential pitfalls along the way.
Exactly. And how China navigates this 2.5 stage will determine whether it achieves its full economic potential or gets stuck in a prolonged period of stagnation or even worse.
Okay, so there are some pretty high stakes here. Now, one thing that really stood out to me in Li Lu's speech is his critique of what he calls outdated paradigms. He argues that clinging to old ideas can actually hinder progress, especially in a world that's changing so rapidly. Can you unpack that a bit?
Absolutely. One example he uses is the obsession with land. In the agricultural era, land was the primary source of wealth and power, right?
Right.
But in a modern, interconnected economy, It's market size and the free flow of resources that really matter.
So clinging to old notions about territorial control is actually counterproductive in a globalized world.
Exactly. And he also challenges the traditional distinction between the virtual economy and the real economy.
Yeah, that's interesting. It seems like those lines are getting blurrier and blurrier every day.
Totally. He uses the example of video game skills being essential for operating drones in modern warfare. I mean, who would thought that gaming skills would be valuable on a battlefield?
Right. It crazy to think about, but it really highlights how much our thinking needs to catch up with how the world is actually working.
I completely agree. And that actually ties into his point about the role of government needing to evolve as well. Instead of trying to command and control every aspect of the economy, governments need to adapt to a more collaborative, service-oriented approach.
It's almost like he's calling for a paradigm shift in how we think about governance in this complex, interconnected world. So, how does all of this relate to value investing? What's the connection?
That's where things get even more interesting, and that's what we'll explore in the next part of our deep dive. So to really understand value investing in our era, Lilu says we need to grasp this concept of the middle income trap. Basically, it's this challenge that countries hit when they're trying to shift from super fast growth to becoming a truly advanced economy.
Right, and we touched on that a bit in the last part, but how does Li Lu suggest countries can avoid this trap? He talked about the need for a really strong capital market, didn't he?
He did. And he uses some really fascinating historical examples too. Like he brings up Venice. Centuries ago, even though it was tiny, it was this global trading powerhouse.
Venice. Wow, okay, what made them so special?
Well, Lilu points out that they were way ahead of their time when it came to their financial system. They were pioneers in things like double-entry bookkeeping, early forms of banking, and they even had insurance.
Huh, interesting. So they were pretty sophisticated, even back then.
They were. And all of that, Lilu argues, allowed them to manage risk and allocate capital really efficiently, which basically fueled their economic dominance.
So it sounds like a robust financial system is really like the bedrock for a thriving economy.
Exactly. And then he goes on to talk about the Netherlands, which kind of built on those Venetian innovations. They created the world's first public company, had a central bank, and they even experienced the world's first major speculative bubble, tulip mania.
Oh, yeah, tulip mania. I remember learning about that. Wasn't that when people were paying insane prices for tulip bulbs?
It was a classic case of irrational exuberance, right?
Mm.
But Li Lu says it also shows just how sophisticated the Dutch financial system had become. And all of that financial prowess played a big part in their economic dominance for, centuries.
So what he's getting at is that to escape the middle income trap, you need a financial system that can do its job well, channel capital to where it can be used most productively.
Exactly. And that brings us back to China and Lilu's perspective on their unique opportunity with Hong Kong.
Okay, Hong Kong. How does that fit into all of this?
Well, Lilu believes that Hong Kong has all the right ingredients. Strong rule of law, credible institutions, it's globally respected. And he says that China could really leverage all of that to develop a modern, robust capital market.
So it's like China has this incredible asset right there that could help them avoid the middle income trap.
Yeah. But he also makes a point of saying that China needs to respect Hong Kong's independence and its unique characteristics. Those are crucial for its success.
It's a delicate balancing act, isn't it?
It is. And that actually leads us to what I think is one of the most interesting parts of Lilu's speech, his definition of wealth in a modern economy.
This is where he really challenges conventional thinking.
He does. He basically argues that true wealth isn't about accumulating things like land or even cash.
Okay, so if it's not about those things, then what is real wealth, according to Li Lu?
It's about purchasing power. Your share of purchasing power in a growing economy. So it's not just how much money you have, but what that money can actually buy you relative to, how much everything costs.
So even if your bank account is growing, if it's not growing as fast as the economy around you, you're actually getting poorer. That's kind of a mind-blowing idea.
It is. And it forces us to think differently about how we invest, right?
Yeah.
We're putting our money into things that are going to keep pace with or even beat the growth of the economy.
Right, because otherwise we're falling behind, even if it doesn't feel like it. And this all ties back to value investing, doesn't it?
Absolutely. Value investing is all about that long game. Identifying and owning businesses that are positioned to grow over time, outpace inflation, all of those things that preserve purchasing power. It's not about chasing trends or getting caught up in hype.
So how do we actually find those valuable businesses in today's world? I mean, it's a complicated landscape out there.
Well, Lyle Lu actually lays out 6 core principles for investors, which he says are especially important in uncertain times.
6 principles. Okay, I'm all ears. What's number 1?
The first one is really simple, but people forget it all the time. He says a stock represents ownership in a company.
Okay, that makes sense.
It's not just a ticker symbol to trade. It's an actual piece of a company's future earnings and assets.
So you really need to understand the underlying business before you even think about buying its stock.
Exactly. What are its products? How does it make money? Who's running the show? You need to be an owner, not just a speculator.
Okay, got it.
What's principle number 2?
The second principle is all about remembering that the market, or Mr. Market, as Benjamin Graham famously called it, only gives you prices. It doesn't tell you what something is actually worth.
That's a crucial distinction. The market can be so emotional, driven by hype, fear, all sorts of things that don't always reflect reality.
Right. So Lyle Lu says, don't let those day-to-day ups and downs, the noise of the market, dictate your decisions. Focus on figuring out the real value of the businesses you're looking at.
Do your research, understand the fundamentals, and don't get swept up in those market mood swings.
Exactly. And that actually leads us to the third principle, which is all about investing with a margin of safety.
Margin of safety, what does that mean? Basically, it means only buying a stock when the price is significantly lower than what you think it's actually worth. It gives you that cushion just in case your calculations are a bit off or if something unexpected happens.
So it's like having a built-in safety net for your portfolio.
Exactly. Now, principle number 4 is especially relevant today, with all the information overload we're constantly bombarded with.
Okay, I'm intrigued. What is it?
It's about developing your circle of competence.
Circle of competence. Sounds important. Tell me more.
So this idea of a circle of competence basically means focusing your investments on industries and companies that you really understand.
Yeah.
You don't have to be an expert on everything.
Right, because that would be impossible. I mean, there are so many different sectors and businesses out there.
Exactly. You'll drive yourself crazy trying to keep up with everything. So instead, figure out what your strengths are, where your knowledge and experience lie, and stick to those areas.
So if you have a background in tech, maybe you stick to investing in tech companies, or, if you're passionate about renewable energy, that could be your area of focus.
Exactly. That's what Li Lu did. He focused on industries and companies that he felt he had a real edge in understanding.
It makes sense to play to your strengths.
Right.
Okay, so that's principle number 4, develop your circle of competence. What's the 5th principle?
The 5th one is a real gem, and it comes from Charlie Munger, Warren Buffett's longtime partner.
Ah, Munger. Always dropping wisdom bombs.
He calls it fishing where the fish are.
Fishing where the fish are.
Huh.
I like that. It's so visual.
It is, and it's such a powerful concept, too. Basically, it means looking for those undervalued opportunities in, less crowded areas of the market. Places where other investors might not be paying as much attention.
So don't just follow the herd. Go off the beaten path a bit.
Exactly. And don't be afraid to zig when everyone else is zagging. There might be a hidden gem of a company or even a whole sector that everyone else is overlooking.
Kind of like finding that perfect secluded fishing spot, right? Where all the fish are just waiting for you.
Exactly. Now, the 6th principle is something Li Lu adds, based on his own experience.
Okay, I'm ready for number 6. Lay it on me.
He says to remember that wealth is ultimately about purchasing power. Invest in those companies that are part of dynamic, vibrant economies.
So it's not just about picking good stocks, it's about understanding the bigger picture. Like, is this company operating in an economy that's set up for growth and innovation?
Right. Because, even the best run company can struggle if it's in an economy that's stagnant or, facing a lot of challenges.
It's like, even if a company's earnings are growing, if those earnings are in a currency that's losing value, that growth isn't really real, is it?
Exactly. And this all comes back to Li Lu's definition of wealth. It's about what your money can buy you in the real world. That's what matters at the end of the day.
So much to think about. Li Lu has given us all a lot to digest.
He has. And I think these 6 principles are really valuable, for any investor to keep in mind.
Okay, so how can our listeners start to put these principles into action? It can feel a little overwhelming, right? All this information.
It can. But the good news is value investing is a long game. It's a journey. You don't have to figure everything out right away.
So where should people start? What are some baby steps?
Well, first of all, internalize those principles. Remember that owning a stock means owning a piece of a business. Do your research. Don't let the market scare you into making bad decisions.
Okay, good starting points. Anything else?
Find your circle of competence, right? Figure out those areas where you have some knowledge or maybe a genuine interest, and then dive deeper into those.
Mm.
Look for those hidden gems. Go fishing where the fish are. And always, always remember, wealth is about purchasing power.
It's a great reminder that investing is more than just picking stocks. It's about understanding the world, finding opportunities, and being part of the growth and innovation that's shaping the future.
Well said. Couldn't agree more.
Lai Lu has definitely given us all a lot to think about, a real call to action to be more strategic and, I think, more patient with our investments.
Absolutely. And I hope our deep dive into his speech has given you, the listener, some valuable takeaways that you can apply to your own journey as an investor.
Thanks for joining us for this deep dive. Keep learning, keep exploring, and as Charlie Munger would say, happy fishing.